Welcome back to the channel. I'm Algabot, and today we're studying an expert advisor for MetaTrader 5 called the Median Channel Breakout. This is a trend-following breakout system with an interesting twist under the hood. Instead of chasing the single highest high or lowest low like a classic Donchian channel, it builds its rails from the median of recent highs and lows, which makes the channel far more resistant to freak spikes. In the next few minutes, you'll learn how the channel is drawn, how a breakout is confirmed, and how the trade is managed. This is educational content only, not financial advice. Let's start with the big picture. The median channel breakout is designed to trade genuine breakouts in liquid, trending markets. Think foreign exchange majors, gold, and major stock indices, typically on the 15-minute through 4-hour time frames. Nothing about the symbol or time frame is hard-coded, so it simply runs on whatever the backtest selects. The core idea is the channel itself. A traditional Donchian breakout fires the moment price clears the single highest high or lowest low of the look-back window. The problem is that this extreme level is often set by just one outlier bar, a news wick, a stop run, or a thin liquidity spike. Price only has to retouch that lonely extreme to count as a breakout. So a large share of those breaks are really just retests of an outlier, and they fail quickly. This strategy replaces the extreme with the median. The upper rail is the median of the last N highs, and the lower rail is the median of the last N lows. The median is the textbook outlier resistance statistic. One freak spike moves the maximum a long way, but it barely nudges the median. So the upper rail represents the typical recent high, the price the market has repeatedly been willing to reach. When price closes above that rail, it has cleared the bulk of recent highs, not just one spike. That's a cleaner, stronger signal of real demand. On top of the channel sits a trend filter. The midline of the channel must be sloping in the direction of the breakout, measured in a way that adjusts for volatility. The EA only takes breakouts that agree with the prevailing drift. It also insists on a fresh cross, meaning only the very first breakout bar of a move can trade. This approach is suited to a patient, rules-based trader who prefers quality signals over frequent activity. As always, remember that trading involves risk, and losing trades are a normal part of any strategy. Let's walk through the exact logic, step by step. Everything is evaluated once per completed bar on a single time frame. First, the EA builds the channel. It takes the median of the last N highs to form the upper rail and the median of the last N lows to form the lower rail. The midline is simply the average of those two rails. To measure trend, the strategy compares the midline now against the midline a set number of bars ago and divides that change by the average true range. This gives an ATR-normalised slope, so the trend gate behaves consistently whether the market is quiet or volatile. If that slope is at or above the minimum gate, the channel is rising and only long trades are considered. If it's at or below the negative gate, the channel is falling and only short trades are considered. Next comes the breakout trigger. For a long, three things must line up on the just closed bar. The previous bar's close was at or below the upper rail, so price was still inside the channel. The current close is decisively above the upper rail, clearing it by a pad equal to a fraction of the ATR. And the signal bar is bullish, meaning it closed above its open. A short is the exact mirror. Price was inside. The close breaks decisively below the lower rail, and the bar is bearish. Because the setup requires the previous bar to be inside and the current bar outside, only the first breakout bar of each move can trade. Price sitting beyond the rail never refires. It has to dip back inside and cross again to rearm, which prevents piling into a runaway move. Now risk management, which is engineered to keep drawdown modest. The stop loss is placed just beyond the recent swing extreme over a short look back, padded by a fraction of the ATR. Because the entry sits right at the rail, that structural risk is small. If the resulting risk is wider than the maximum allowed multiple of ATR, the trade is skipped entirely, capping the loss any single trade can take. The take profit is set at a reward to risk multiple of that risk, with a default of 1.8. Once price moves a defined number of risk multiples in favor, the stop jumps to break even and then trails behind price by an ATR-based distance, and it's never loosened. Finally, only one position per magic number is allowed, and a spread guard blocks entries when conditions are poor. Here's the heart of the MetaTrader 5 code as you'd see it in MetaEditor. At the top are the inputs. ChannelPeriod is the median lookback for the rails. Slope bars and SlopeAtrMin control the trend gate on the midline. BreakAtrMult is the pad the close must clear beyond a rail to count as decisive. Then ATR-period, the swing and stop settings, the maximum risk cap, the reward to risk multiple, the break-even and trail settings, the spread guard, the lot size, and the magic number. Now the two signal blocks. The variable fresh up is true when the previous close was at or below the prior upper rail. The current close is above the current upper rail plus the break pad, and the bar closed above its open. That's a fresh, decisive, bullish break of the upper rail. The variable fresh DN is the mirror, previous close at or above the lower rail, current close below the lower rail minus the pad, and a bearish bar. Below that, if the trend is up and fresh up is true, the EA calls trienter with true for a long. Otherwise, if the trend is down and fresh DN is true, it calls trienter with false for a short. Inside trienter, the stop is placed just beyond the recent swing low for a long or swing high for a short, padded by ATR. Risk is the distance from entry to that stop, and the take profit is that risk multiplied by reward risk. Finally, trade.buy or trade.sell submits the order with the stop and target attached. Clean and symmetric on both sides. Let's bring the logic to life on this illustration. On the chart, you can see two blue lines wrapping the candles. The upper blue line is the upper rail, the median of recent highs. The lower blue line is the lower rail, the median of recent lows. The gold line running between them is the midline, and the slope of that midline is the trend gate we talked about. Start on the left. The first several candles are climbing gently. Each close is a little higher than the last, and notice the midline is tilting upward as we go. That rising gold midline is the strategy's permission slip. Its ATR-normalized slope has cleared the gate, so the EA is now only interested in long breakouts. It's watching the upper rail and waiting. Watch the fifth candle. Up to this point, every close has stayed underneath the upper blue rail, tucked inside the channel. Then this bar pushes up strongly and closes decisively above the upper rail, clearing it by more than the required pad, and it closes above its open, so it's a bullish bar. That is the fresh, decisive breakout the code is looking for. The previous bar was inside. This bar is outside, and the trend agrees. The buy entry marker prints right there. Because the entry sits close to the rail, the stop can be placed just below the recent swing low with a small ATR pad, which keeps the risk tight. Now follow the trade. The 6th, 7th, and 8th candles march higher, each one extending the move. As price advances past the break-even trigger, the stop is lifted to the entry price and then trails behind, protecting the open profit. By the 8th candle, price has reached the take profit target, which sits at the reward to risk multiple of the original risk. The take profit marker prints, and the long trade closes for a planned gain. That's one complete long cycle. Rising midline, fresh upper rail break, run to target. Now the market changes character. Look at the 9th and 10th candles. Price stalls, then rolls over. The rails begin to flatten and turn down, and crucially the gold midline starts sloping downward. The trend gate has flipped. The EA now ignores long setups and watches the lower rail for a bearish breakout. The 11th candle delivers it. The prior closes were resting on or above the lower rail, still inside the channel. Then this candle drops and closes decisively below the lower blue rail, beyond the pad, and it closes below its open, so it's a bearish bar. That is the mirror image fresh breakout and the sell entry marker prints. The stop goes just above the recent swing high with its ATR pad, again keeping risk contained. From there, the 12th and 13th candles slide lower. The same management applies in reverse. Once the trade is far enough onside, the stop ratchets down to break even and trails the falling price. By the 13th candle, price reaches the short take profit target and the trade is closed. Notice the through line in both examples. The strategy never guesses. It waits for the midline to define the direction, then requires the very first decisive close beyond the median rail before committing, and it always knows where its exit is before the trade even opens. So there you have it, the median channel breakout. We covered how it builds a spike immune channel from the median of recent highs and lows, how the midline slope acts as a trend gate, and how it only trades the first decisive close beyond a rail. We also walk through the structural stop, the reward-to-risk target, and the break-even trail that manages every trade. Remember, everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losing trades will happen. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like analyzed next, and subscribe for more MetaTrader 5 strategy studies. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.